Welcome back. Today we're revealing the secret tax deductions most LLC owners miss, costing them thousands every year. These aren't risky loopholes, they're legit IRS-approved deductions designed for small business owners. The problem? No one explains them simply, so most people leave money on the table. I've done the research and will break down the top 10 overlooked deductions that could save you big on your 2025 taxes. Stick around for a bonus tip at the end that's so easy, you'll wonder why you didn't do it sooner. Grab a notepad, this is your roadmap to a lower tax bill. Let's dive in. Let's start with the home office deduction, a goldmine most LLC owners ignore or underuse. To qualify, you need a space in your home used exclusively and regularly for business. It doesn't have to be a whole room, just a dedicated area. Exclusive use means no personal activities in that space. Regular use means it's your main spot for business tasks. You have two ways to claim this. The simplified method, up to 300 SQ, FTX $5 $1,500 max, or the actual expense method. The actual expense method lets you deduct a percentage of your home expenses, mortgage interest, rent, utilities, insurance, repairs, based on your office's share of your home's square footage. For example, if your office is 10% of your home, you can deduct 10% of those costs. This can add up to thousands in savings, especially if you track your expenses carefully. Keep receipts and utility bills. Good records are key. Don't let myths or fear of audits stop you from claiming what you deserve. The home office deduction is one of the most powerful tools for LLC owners working from home. Choose the method that gives you the biggest deduction. A little organization can mean a huge tax break. Don't overlook this. Maximize your savings. It's money you're already spending. Turn it into a deduction. Make your home work for your business and your bottom line. Health insurance is expensive, but as a self-employed LLC owner, you can deduct 100% of your health, dental, and qualified long-term care premiums for yourself, your spouse, and dependents. This is an above-the-line deduction, directly reducing your adjusted gross income, which can unlock other tax benefits. Your LLC must have a net profit, and you can't deduct more than your business earns. If you or your spouse are eligible for an employer-subsidized plan, you can't take this deduction, even if you decline that coverage. Check eligibility monthly. For many, this deduction can save thousands each year. Family health plans can cost $15,000 plus annually. Deducting that at your tax rate is a huge win. Track your premiums and eligibility. Don't miss this, it's one of the biggest tax breaks for self-employed business owners. Take advantage and keep more of your hard-earned money. Every dollar counts. Want to save for retirement and slash your tax bill? Use a SEP IRA or solo 401k. With a SEP IRA, you can contribute up to 25% of your net self-employment income, up to $69,000 for 2024. Every dollar you contribute is a dollar you don't pay tax on now, plus it grows tax deferred. The solo 401k lets you contribute as both employee and employer, often allowing higher contributions at lower incomes. You can also make Roth contributions and even take loans from your solo 401k. Both options are easy to set up and can mean massive tax savings. Choose the plan that fits your income and goals. Pay your future self, not the IRS. Max out your contributions if you can. Retirement plans are a win-win. Lower taxes now, more wealth later. Don't leave this on the table. Business meals are deductible if you follow the rules. For 2025, you can deduct 50% of qualifying business meal costs. The meal must be for a direct business purpose, meeting with clients, partners, or prospects. Keep it reasonable, no extravagant dinners. Documentation is everything. Save the receipt, note the date, location, business purpose, and who attended. Write this info on the receipt or use an app. No documentation, no deduction. Regular business meals can add up to thousands in deductions each year. Make it a habit to track every business meal. It's money you're already spending. Turn it into a tax break. Stay organized, and you'll maximize this deduction. Don't let sloppy records cost you. Your car is a business tool. Make every mile count. Deduct vehicle expenses using the standard mileage rate or actual expenses. Standard mileage is simple track business miles, multiply by the IRS rate, for example, 67 mile. Actual expenses require tracking all car costs, gas, maintenance, insurance, depreciation, and deducting the business use percentage. Keep a detailed mileage log: date, miles, purpose. Use a notebook or an app. Guessing isn't allowed. For actual expenses, save every receipt. Run the numbers both ways to see which method saves you more. The right method can mean thousands in deductions. Don't skip the log: no deduction. Your car is a mobile write-off. Use it wisely. Stay organized and the savings add up. Make your business miles work for you. Invest in yourself and get a tax break for it. Deduct costs for courses, seminars, workshops, industry publications, and even travel for business-related education. The education must improve skills for your current business, not qualify you for a new career. Conference tickets, airfare, lodging, and 50% of meals while attending are all deductible. Keep receipts and document how each expense relates to your business. This deduction encourages you to keep learning and growing. It's a smart way to combine professional growth with tax savings. Don't hesitate to spend on your development. The IRS rewards it. Track every expense and maximize your deduction. Your business gets stronger and your tax bill gets smaller. Every business runs on software. Make sure you're deducting it all. Accounting tools, project management apps, creative suites, website hosting, cloud storage, and more are 100% deductible. Small monthly charges add up. Don't overlook them. Pay for subscriptions with a dedicated business account for easy tracking. Review your statements and list every recurring software expense. These costs can total hundreds or thousands a year. The IRS recognizes them as essential business expenses. Don't leave easy money on the table. Track, deduct, and save. The Qualified Business Income (QBI) deduction lets most LLC owners deduct up to 20% of their business profit. If your LLC earns $100,000, you could deduct $20,000, taxed on only $80,000. QBI applies to most pass-through businesses, but there are income limits and some restrictions for certain professions. Below the income threshold, it's straightforward. Above it, the rules get complex. QBI doesn't include capital gains, dividends, or interest, just business profit. If you're in a specified service field and over the limit, the deduction may phase out. Ask your tax pro to make sure you're getting this deduction. It's one of the biggest tax breaks for small business owners. Don't let confusion or complexity stop you from claiming it. Make sure it's on your radar every year. Starting a business costs money. Get a tax break for it. You can deduct up to $5,000 in startup costs in your first year, expenses like research, business plans, legal fees, and pre-launch marketing. If your startup costs exceed $50,000, the deduction phases out dollar for dollar. Any remaining costs are amortized over 15 years. Track every pre-launch expense, keep receipts and records. Don't assume you can't deduct these costs if you're not profitable yet. Claim your startup deduction and set up amortization for the rest. It's a great way to offset early business expenses. Don't miss out on this first-year tax break. Sometimes clients don't pay. Here's how to handle it. If you use accrual accounting, you can deduct bad debts for income you've already reported but never received. Cash-basis businesses usually can't deduct unpaid invoices since the income wasn't recorded. To claim a bad debt, show you made real efforts to collect. Keep all documentation. This deduction prevents you from paying tax on phantom income. Know your accounting method and apply the rule correctly. Strong collection processes help avoid bad debts. Don't pay tax on money you never got. That's 10 powerful, often missed deductions for LLC owners. Remember, consult a tax pro for advice tailored to your business. If you found this helpful, like and subscribe for more tips. Comment below with your biggest surprise or questions. Bonus tip. Open a dedicated business bank account and credit card. Never mix personal and business finances. This makes bookkeeping easy, protects your liability, and ensures you never miss a deduction. Build this habit for financial success. Thanks for watching. See you next time.